Yes, looking at the situation across Europe, the politics is one thing.
Right.
It looks volatile, it looks messy. The data, it's something else. It paints a very different picture. It's two different worlds, it seems. Try and reconcile the two for me.
Yeah, but not that different. And let me tell you why. First, the data, of course, is key, which is that for the first time since the global financial crisis, the European economy now is growing faster than the United States economy. So, in fact, for this quarter, we have European growth tracking at about 2% or so. That's pretty good, because in per capita income terms, that's even better given the poor demographics in Europe relative to even the United States. So that's one. And on the politics side, yes, there's a lot of fear as far as Europe's concerned, but even at the epicenter of that fear factor, which is France, look at what's happening in the polls, which is that in the first round, everyone obviously thinks that Le Pen will make it. But in the second round, if you look at the polls, when you do a head-to-head of Le Pen and whoever comes up against her, that candidate X is up 25 to 30% in the polls against that candidate. Now, of course, the polls can go terribly wrong. We know about that. Yeah, but the margin of error here would have to be huge for this to work out. So in terms of for her to make it all the way. So I'm not that worried about European politics this year, even though on a big macro trend basis, on a multi-year basis, yes, the rise of populism, the rise of nationalism is here to stay. But I think that whether that tide sort of sweeps Europe also this year, I'm a bit skeptical of that.
But things have changed to the extent that you'll come on a programme, you'll write a research report, and you'll have that paragraph that says, look at the polls. But now there's an asterisk that says, go to the bottom of the page, and in the small print it says, I know what you're thinking, the polls are terrible. That must make you nervous to some extent.
Well, sure, of course it does. But as I said, that the margin of error here is huge, which is we're talking about 25 to 30% in terms of the lead that whatever candidate comes up against Le Pen has in the polls. And of course, there is the other sort of prospect which we have seen, that whether it's Brexit or the victory of Trump, that finally when those events happen, how markets take it is very differently than what people think before those events actually take place. So that's the other caveat there. Having said that, of course, if you do get a vote like that in France, it would be quite a shock. But I think my case is that if you look at France, Germany, even places such as Netherlands, where the elections are going to be held, the chance of a populist government coming to power in these countries, to me, remains very, very low. And the European constitutions have been made after the Second World War exactly for preventing this kind of an outcome. So let's see if that works out that way. But I feel okay about Europe. In fact, I feel relatively bullish about Europe and European equities this year.
Well, Ruchir, talk about that bullishness, because you've made a persuasive case that the worst of the worst won't happen. But that's not a case saying that the best of the best will. I mean, you talk to investors and they say, there are a lot of risks over there, and they're almost all to the downside. What's the upside risk? What's the big benefit that may be in Europe?
Well, let's put a few things in perspective here. One, that European equities today are trading at multi-decade lows relative to US equities, right? So we have already seen a massive period of underperformance in European equities like possibly we have never seen in history before. So we're at the bottom of that. Secondly, that the euro now appears to be quite cheap. So the dollar's bull run is quite extended, and the euro does appear to be quite cheap. Now, of course, it can get cheaper, but it does appear to be quite cheap. And the third is the fundamental changes which are happening in Europe. That they have delevered. If you look at European debt as a share of GDP, especially banking debt, that has come off. European growth has picked up because there's a lot of pent-up demand in Europe. Europe has already suffered 2 recessions in the last 7 to 8 years, and the odds that lightning will strike thrice at the same spot, to me, are relatively low.